Britain's turned the most confident about their finances in a year, but will it last? UK consumers are the most optimistic they've been about their household budget in 12 months, a sign that Britons are starting to feel the benefits of the Bank of England's interest rate cuts. But there are many clouds on the horizon in the form of inflation and rising unemployment. So is the summer sunshine over for the UK economy? Fiona Cincotta is a senior market analyst at City Index. So Fiona, UK inflation numbers were ugly this week, climbing to an 18th month high. What's pushing prices higher?
Yes, so they came in hotter than expected. Now, there is an element of timing involved here. So obviously at school holidays, we saw airfares jumped 30%. So that was a big contribution to the CPI report. In fact, overall transport was also a strong contributor, but also food and non-alcoholic beverages. Now, we saw those rise by 4.9% in July. So that's quite a steep move higher. Now, that's as a result of increased commodity prices, but also supermarkets passing on to the consumer this higher tax burden that they're facing, and also that rise in the minimum wage that came into effect in April. So a combination of these factors have resulted in inflation coming at 3.8% year on year. Bank of England does actually see that increasing to 4% before the end of the year, so it could still be creeping higher still.
Meanwhile, the UK's private sector expanded at the strongest pace in 12 months. Are businesses shaking off the impact of tax rises?
Well, it's definitely encouraging news, stronger than expected, especially on the services side of things, and also encouraging given that we had that stronger than expected Q2 GDP data as well. So there are signs of encouragement. Expectations and optimism among businesses are also at the highest level since October 2024. So again, good news. But I think there are clouds on the horizon. I think there is going to be a limit to how much these businesses will be able to pass on costs. Then we'll start to see margins being squeezed. If we see any sort of weakness in the labour market as well, that's going to be impacting the potential for growth going forward as well. So whilst we are seeing some encouraging signs right now, I do think there is reason to be cautious going forward. And I think that's been very much reflected in the pound over this week as well. We've seen the pound fall against the US dollar by about 1%, and it's also down against the euro by around 0.2%. And that is a reflection, I think, of the nerves around the outlook for the state of the UK economy, despite the fact that we've seen those hotter inflation figures and stronger than expected PMI data.
More numbers as well to look through. The budget deficit shrank more than expected in July. Welcome news for Finance Minister Rachel Reeves, especially with the big autumn budget coming up.
Yes, some welcomed good news, I think, at least in the near term. This was actually the lowest July level for 3 years as well. So I think that does add a little bit of credibility to Rachel Reeves when she really does need it. But I think over the medium term, things are still looking a little bit sticky. And obviously, we've got that budget coming up. There's a medium term black hole estimated to be around 27 to 51 billion that will need plugging at some point. So that also adds some pressure. And then also, let's not forget that she's still trying to sort of weigh up this dilemma that she's dealing with of trying not to tax the working class person, trying to boost investment, but also trying to stick to her fiscal rules. And it does look like that is going to be quite a challenging proposition for her as we approach the budget.
Challenging situation as well for the Bank of England. Governor Bailey warned of a genuine uncertainty about their next move. What's your timeline for rate cuts this year?
Yeah, I think this year is going to be a little bit of a challenging year as far as the Bank of England's concerned, because as we've mentioned, we've got this sticky inflation. Sort of the economic growth appears to be sort of holding up with the PMI data, that stronger than expected Q2 GDP figures. We are seeing a little bit of weakness in the jobs market, but definitely not a collapse at all. So I think we are going to have to see the Bank of England sit in a wait and see mood or adopt a wait and see stance, should I say, for the rest of this year as they see how all this plays out, the increased tax burden on companies, whether we're going to see that sort of ongoing weakening in the jobs market, whether that inflation increase is in fact transitory transitory and then falls back down quite quickly. Now, I don't think, and I'm in line with the market, that the Bank of England will be cutting interest rates again this year. I do think it will likely be early next year, likely February. However, I also do think that we could see those grey clouds that are forming on the horizon of the UK economy right now really coming to impact the economy next year, which means the Bank of England may need to be cutting interest rates more aggressively next year. In fact, we could see the Bank of England cut rates down to around the 3% level by Q3 next year.
That was Fiona Cincotta from City Index. Don't forget, you can watch more videos on Reuters.com.